Have you ever started working on your taxes in February and you realized as you started working through them that there were a lot of deductions maybe you could have done or taken in December, November, basically the previous year that you didn't take? Have you ever been there? I know I've been there. So that's why I'm giving this video here the week of Thanksgiving so that you have time between now and the end of the year to do all those things. So you're not sitting in your desk in February wondering, why didn't I take those deductions last year? I'm gonna give you a list of things that you need to be thinking about this year. Let's do this. All right, so this video is gonna be pretty quick, pretty dirty, different than most of the videos I do. I'm just gonna go through 10 things that you can do to save money on your taxes in 2021. You ready? Let's go. Number one, prepay your 2022 bills. So what does this look like? Well, if you are in an office space and you are paying rent in that office space, instead of waiting until January to pay your rent for January, pay your rent in December. Maybe pay your rent for February too, if you can afford to do that. That would be one thing that you can do. Prepay those expenses for next year in December before the end of the year. If you can prepay some utility bills, prepay those utility bills. Just send in some extra cash to those utility companies. They're not gonna mind, they're not gonna send it back. They'll be more than happy to take your money. So go ahead and do that. If you are thinking about getting a business coach and maybe you want to prepay some of those expenses for 2022. Do that. Maybe you could pay for a full year in advance and they'll give you a little bit of a discount. Do that. If you need some contracts for your business and you want to take advantage of some Black Friday specials to buy those contracts, well, there's a link down below where you can do just that at my one-stop legal shop contract shop. That might be something you want to do. So that's the first thing. Prepay your expenses for 2022 this December. Number two, sell your losses. So what do I mean by this? I mean, if you have been investing in the stock market in a taxable account, and maybe you've got some winners this year, you got some losers this year, sell the losers. Because if you sell those losers and you don't invest in a substantially similar security for 30 days, then you can actually take those losses and offset up to $3,000 of those losses against your adjusted gross income. And if you have anything over that, you can just roll that over for next year or the year after or however long you need to take advantage of all those losses. Number three, along with selling your losses, if you're going to be rebalancing your portfolio, sell those losses here in 2021 and then wait until all those capital gains distributions have been paid out in 2021 and then rebalance in January after 30 days have passed. So you get multiple benefits there. Number one, you don't have to pay taxes on those capital gains distributions that are baked into the net asset value of your mutual funds anyway. Number two, you get the tax benefit of selling those losses. And then number three, in January, you're reallocated anyway and you're good to go. All right, number four, max out your retirement savings. Now, yes, you can contribute to an IRA, a Roth IRA, a health savings account, all those things up until April 15th of next year and still take advantage of them on this year's taxes. But what you can't do is if you have a 401k that you want to max out for the year, you have to make those contributions before December 31st of this year. So you can contribute up to $19,500 to a solo 401k, plus an additional $6,500 if you're over the age of 50. And plus, if you are your own employer, if you have a solo 401k and you're the employer and you're the employee, you can also contribute additional amount up to $58,000 to that solo 401k. So, but you have to do all of that before the end of the year. If you're still working for an employer, then make sure you boost your retirement savings now and tell them to take out the max that you can take out of your salary to make sure you take the most advantage of those 401k contributions before the end of the year, because once the clock strikes midnight on December 31st, you're back to square one. You can't do that. You can't deduct your 2022 contributions in 2021. Obviously. Number five, if you itemize, and this is really only going to work if you itemize your tax deductions, you want to give stuff away before the end of the year. Sorry, I'm getting a little parched here. I'm getting excited about these tax deductions. Got to do a lot of talking here. This is a great time to declutter and clean house and get rid of your shit. So if you take the standard deduction, you can still give away up to $300 per person. So if you're married, $600 in a cash donation to a charity of your choice. But if you're itemizing, you can start getting rid of all that stuff that you don't want or don't need, and you can just take it to Goodwill. You can donate it all before the end of the year, and then you can have a nice little write-off for your tax return. Number 6, consider a Roth conversion. If you think your taxes are actually going to go up next year, or if you think you might be in a higher tax bracket or your income's going to go up, then think about converting the money that you have in a taxable account into a Roth account in 2021. And by doing that now, you're going to pay taxes on it, but you're going to pay taxes on a lower rate than you would if you wanted to make the contribution next year, for example. So something to think about there. Number 7, contribute to a 529 plan. If you live in one of the 32 states that allows you to deduct that money to the 529, great, good for you. Extra tax deduction. Even if you don't live in one of those states, you can contribute to that 529 plan, and that money is going to grow tax-free until you need to withdraw it for your children, federal tax and state tax-free if you use it for education expenses for your kids. So, bonus. All right, number 8, maximize your work-related deductions. So whether you're self-employed or you're working for somebody else, maximize those travel, transportation and travel expenses, maximize your meals and entertainment expenses, prepay your dues for 2022, purchase new uniforms if you need them for work and you can't wear them outside of work. Consider investing in work-related educational expenses if you need anything like that. So like for me as a lawyer, I need to do all my CLEs. It makes sense for me to purchase all those CLEs that need to be done before the end of February of next year. I might as well purchase them all this year so that I have all those CLEs done and I've got that taken care of. So those are the type of things that you want to make sure you take care of before the end of the year. Number 9 is you want to schedule your required minimum distribution. So this is only going to be if you're age 72 or over and you have a retirement account, or if you have an inherited. Sorry about that, my battery died for a minute there. Well, not really for a minute, I mean, it died, so. But I'm back. Where was I? Required minimum distributions. These are only required if you have a retirement plan and you were 72 years of age or older, or if you have an inherited IRA, which you've received from a relative who's deceased, and you have to take a required minimum distribution for that. So make sure you do that before the end of the year. If you do not do that before the end of the year, then you're subject to a 50% penalty on that distribution, which is huge. So this is easy money. Take the distribution and deposit that into your personal account or investment account, or take the money and take a vacation, whatever you want to do. Make sure you do that before the end of the year. All right, and the last one, and this is, this one is it's just common sense, but so many people miss it. And that is to defer your income. And so what do I mean by this, or how do you do that? Well, if you get paid with a check, so maybe you're a consultant or a contractor or someone who receives checks. I don't know who does that anymore, but it used to be that we received checks. I haven't received a check in quite a while, other than a refund check from like an insurance company or something. But if you still receive a check, then take that money and defer it till January. Don't deposit it into your bank account until January. So that's one way to do it. That's the easiest way to do it. So if you receive a bunch of... I consulted with somebody recently who said that he'd been paid on a bunch of projects and he hadn't deposited it yet. I mean, I think that's gambling, because if you wait too long, then the company that you're supposed to that paid you the check could just cancel the check. I wouldn't wait like months and months and months. But if you got paid somewhere in the middle to end of December, hold that money off till January if you can afford to do that, and deposit and take that income next year. So that's one way to delay taxes. The other way to do that is if you have some sort of program where you could offer people a free trial or a free membership for a month. Well, you can offer those programs in December, which is a great time because people are looking for deals in December and they don't want to spend a lot of money in December. because they're buying people Christmas presents and gifts and all sorts of things. So, but if you can offer them a free membership and then they don't get charged until January, that would be another way to do it. And then the other thing would be if you're thinking about launching in December, I don't know why you would, because that's not a great month to be launching, but just delay that launch and do the launch in January instead. And so delay your income until January. So those are my tips. Let's just go through them one more, just so you have all of them. Number 1, prepay your 2022 bills. Number 2, sell your losses. Number 3, wait to rebalance your stocks until after capital gains distributions have hit. Number 4, max out your pre-tax retirement savings, your solo 401k, things like that. Number 5, if you itemize, give stuff away before the end of the year. Number 6, consider a Roth conversion if your income is going to go up. Number 7, contribute to a 529 plan. Number 8, maximize your work-related expenses to the extent you can. Number 9, schedule a required minimum distribution before the end of the year. And number 10, defer your income until January. There you have it. Those are my tips for 2021. If you'd like to see my tips from last year, some of them may still be applicable and they might be a little bit different than what I talked about this year. Here's another video that talks about my tips from last year. Thank you so much for watching, folks. We'll see you in the next video. Take care. Oh, by the way, did I mention that I'm running a Black Friday sale this week? Yeah, check out the link down below. We'll see ya. Bye-bye.